Hello everybody, very, very good morning to you all and welcome back to another Taurex live trading session here on a brand new week in the markets, and hopefully a week where we have plenty more market opportunities. And this is our weekly preview stream. This is something that is recorded as well for those watching on catch up. Hello to you, and I hope you had a good weekend and had a good trading week last week. We obviously ended with that NFP print on Friday, which I won't go into massive detail because that news has been and gone, but it was a strange print. A very, very strange print. I'm still not quite sure, or if even the markets are sure, on how to break that one down. It was slightly softer on the actual jobs figure itself, but a lot stronger in terms of, well, not a lot stronger. It was stronger in terms of wage growth and the unemployment rate as well. So a little bit of a mixed bag. And when that happens, we sort of park it to one side and we look at the next big event that's coming up, which is all about inflation this week. So we're going to do, as we normally do on a Monday, we're going to be looking through the economic calendar and breaking down what the big events are, what we need to be looking at. And then from there, we'll see what trade ideas I can come up with personally for myself. Last week wasn't a great week. I took one trade on dollar yen, which didn't work out very well, which we spoke about in a bit of detail in last week's stream. Hopefully this week we can turn that around, which is the goal. So if anyone does have any questions on anything that's coming up for this week, feel free to let me know. Dibble, hello to you. It's good to see you, and I hope you're doing well and had a good weekend. And hope you are ready for what should be a fascinating week in markets. So let's jump straight into it. We don't want to waste any time. And Trump was at it again over the weekend, but not too much of a reaction. It's not like last week when the markets really reacted to the tariffs he put in place. But we should note this. Over the weekend, Donald Trump decided to announce a new 25% tariff on all steel and aluminium imports into the US. And you'll probably notice that commodity prices today have been the biggest story and the reason for that increase. But overall, the market reaction here is a bit mixed, and I think the reason is because I think we're a little bit confused. I think the market's a bit fatigued. They're not quite sure what's going to be coming in the long run in terms of Trump tariffs, and so this is a story which I want people to keep an eye on, and it could be something that we have a bit of a delayed reaction to. But as of now, the reaction hasn't been like it was last week, let's just say that. So he said on Sunday he's going to introduce new 25% tariffs on all steel and aluminium imports, on top of existing metal duties, in what is been dubbed as another major escalation of his trade policy overhaul. When we look at commodities today, and I was looking at the reaction of some of these, if you look at here, I'm on that commodities section at the top right hand corner, you can see actually the reaction was fairly mixed, right? So, but overall, commodity prices have been increasing as a result of that. That's something that we expected, really. See if that continues this week. Now, I wanted to touch on some analysis on gold that we had a look at last week. If I just make this a bit bigger, like that, you can see that clearly. Actually, I should probably, let me just make this. There we go. You can see that now. Right, 4-hour time frame. This is one of the strategies that I trade quite frequently. What I look for triangle patterns are quite good. So you look at the actual trend itself, and then you look at the pattern or the consolidation pattern that's resulted from that, and then we look at the breakout as a result, and then we try and get in at the retest of a FVG. Normally it's quite a good one, so when you get that breakout candle, you normally have that FVG, and you can see that looking at this, here was our triangle pattern. Okay. Down here. Here was the breakout, retest on Friday, NFP, wicked into that retest, and then boom. You see the market instantly has now started to move higher. So we're now at that next leg higher. So I'm probably a little bit frustrated today because I put the analysis in the room, but I didn't really have a clear entry as such. If I drop that down onto the 1 hour time frame, it might be a little bit more clear, should we say. You can see that on the 15-minute time frame, where was it? Yeah, it might have even been on a lower time frame, 5-minute maybe. Yeah, look, you can see that. Zoom right in on here. You can see that FVG basically between 2861 and 2863. And what you can see is a liquidity build up there as well. Liquidity build up there. Market came down, you know, typical NFP day. It's probably what stopped me from actually placing the trade itself. And you can see we reacted from that FVG a little bit, but actually closed below it and actually came even further down. And when I was trying to look to see if there was anything on the hourly time frame, I couldn't really make sense of why we reacted from there. So if you would have entered, probably, there's the breakout, FVG, probably something like that. Now I probably would have had my sell maybe here. And you can see that move higher. Again, wasn't a trade that I actually put in, but you can see how that analysis worked out. So now, then we had that massive bearish engulfing candle, another retest after that breakout. This was the trade. Now that was at 5 o'clock on a Friday for me, so it wasn't really a time that I was active actually trading it as such. But then you can see we've started to move higher. So my stance for gold remains very much the same. We've now created a new leg high. We've broken out to new all-time highs, and we're gonna rinse and repeat exactly the same thing. So what I'm now looking for is a situation where we get some sort of pullback, okay, and then we look for the next leg. We just keep following the trend all the way, always follow the trend. And that's the same, exactly what we're going to be doing for gold and what I'll be doing for all these markets going forward. So I'd say a little bit frustrating that we didn't manage to actually get, or I didn't actually manage to get the trade idea itself. But the breakout on gold was something that we predicted last week, which is pretty good. Now, when it comes to the economic calendar for this week, actually it's not as stacked as it was last week, obviously with the decisions that we had and the NFP on Friday, but we have a very, very important event. So let me just quickly break this down for you. So we've now got, for the first time in a while, we've got a typical Monday, and that's where we haven't really got anything high impact to keep our eyes on. We've got a speech from Lagarde, but I won't worry too much about that. And then as we head into Tuesday, we've got a testimony from Fed Chair Jerome Powell. So that's probably something to take a look at, because obviously we're going to want to hear how he wants to communicate interest rates going forward. Obviously at the moment we're in a situation where we're pricing in 2 interest rate cuts this year. I can't imagine just before inflation that he's going to give anything else away. But then as we head into Wednesday, what will move the goalpost there and what probably will move the markets as a result is the consumer price index data, which is the inflation data in the US. We're going to get the inflation print in the US. Now, if you look at the year-on-year figure here, 2.9%, currently this year-on-year figure is actually at its highest that it's been since August. Okay, so it's quite clear that inflation is sticky, and the hawkishness that we're pricing in, the fact that we've only priced in 2 interest rate cuts this year, I think is fair with the inflation that we've seen and the fact that we've got quite I'd say a warm economy in the US. Now, with the figures that are coming out today, if I just break this down, month on month, 0.34, previous 0.4, forecast is 0.3. So if we manage to get the year-on-year inflation figure this week and that comes out at 3% or higher, expect more of the same. The stock market probably won't like it, and the dollar index is probably going to surge. Gold prices will probably flatten out a little bit, / have a little bit of a decrease. But what you got to remember is what's already been priced in, like I've just said, is that max level of hawkishness, really. And so the risk here is that inflation comes in softer, and then if inflation comes in softer, we're probably going to see a week which is positive for the stock market and a week which is negative for the US dollar. So they're the 2 scenarios that I'm looking at, and this is really going to gauge where I think markets are going this week. Now, that's the main event of the week for sure. We have more testimony from Fed Chair on Wednesday as well. And if you're a trader of the pound, on Thursday we have this figure here, which is the gross domestic product. So it's another high impact news event. That's the economic growth in the UK. Okay, so again, similar sort of thing. If economic growth is higher in the UK than what's forecasted for this print, we're expecting some pound strength. if economic growth comes in softer. We had the Bank of England cut last week as well, so we're already sort of leaning towards pound weakness in the short term. Lower GDP figures are going to exaggerate that, and we're going to probably see some more downside in the pound. Therefore, this week that makes, for me, the pound dollar trade a really interesting one, and I'll go onto the charts and try and spot something that I'm looking for there as well. And then Friday, GDP out of Europe. So again, probably not a bad week to trade Forex, to be fair. GDP out of Europe, again, same sort of thing. Stronger GDP, stronger euro, weaker GDP, weaker euro. On the surface level, that's what we should be expecting. Okay, so onto the charts. And we're going to go really from the top. I'm going to start on the stock market. So, this is the US 30 right now. And if there isn't anything I like, I'm going to move on. So I'm going to go top to bottom today and to really knuckle down a market which is looking good, because I've found it quite difficult the last couple of weeks to find any real clear direction. I've spoken to some other traders as well, and they've said exactly the same thing. So let's just sit back and have a look at the US 30. Now, the thing about the US 30 is, if I zoom in here, we did just about take the liquidity on this low. Let me change this style, make that clearer. Okay. Can you see that? There's that wick below there. So we've grabbed the liquidity on the low. Bullish sign, right? When you look at the top side, I always say, where's the liquidity? Well, it's up here. So now we've sort of nipped the liquidity on the downside. For me, this week, if we can get a softer inflation print, I think we should be looking general direction, something like that. The Nasdaq, I believe, has a similar sort of situation. In fact, the Nasdaq is such a mess. I mean, yeah, that's a mess, right? It's really, really difficult to trade that. So I don't really tend to trade ranging markets too much. And the US 500. Similar sort of thing, right? So actually, for me, the US 30, if you're going to trade the stock market this week, the US 30 is actually one that I think is shaping up to be an attractive market to look at. So we're going to that's the first thing for the stock market. We're going to look for that US 30 upside up to that liquidity area. Now, US dollar. Let's go into Forex. Again, this is going to matter. Do we get stronger inflation? Do we get weaker inflation? That's really what's going to be the driver for the dollar this week. Again, markets in a range-bound consolidation period. So you'll notice I'm not someone who rushes into trades, right? I always wait for the markets to come to me. What I've seen at the moment, and it's not very fun, is we've got a stock market which, okay, we've got that US 30 potential. The dollar, it's not really doing anything. I mean, it's not really done anything since the middle of December. We're not quite sure where the clear direction is, and I think that can inflation change that this week potentially? Again, typically strong inflation, we could see that dollar up to 110. Weaker inflation, we might start to see the dollar rolling over down towards the mid-hundreds again. But again, right now we're stuck right in the middle of the range, and this sort of price action will be where the majority of traders blow their accounts up, because they're trying to chase it and they're not really following the fact that there isn't any clear direction just yet. However, let's just have a look anyway. Pound versus US dollar. Okay, nip the liquidity on the top side there. Weaker GDP out of UK this week, coupled with a fairly strong inflation print. There's no reason why we can't see another leg lower here in the pound versus the US dollar. So until I see evidence otherwise, until I see evidence of inflation falling and I see evidence of cuts being priced back in, and until I see evidence of the UK economy, you know, I'm say turning around, but showing signs of some sort of strength, for me, I'm going to follow the daily trend and the 4-hour trend and say, right, let's have a look to see if we can get any downside. Now, what I'm noticing is that with the way that I would normally trade by looking at, market structure and that, following that like you saw on gold, that's the normal way I trade. Can't do that here. So I'm going to utilize a secondary strategy that I like to use, which gives me an idea of whether the markets are in a state where I could trade them. For those of you who've been on my streams before, Dibble, Curtin, Bobby, you probably know the trend rider strategy. That's probably where I'm going to go this week. So look at the 4-hour time frame. So I've got the EMA 12 and the EMA 36. And when these lines are really close, like you can see there, that's basically indicating to us that the market is in a consolidation period and is choppy and is messy. And that's not where I like to trade. Same, you can see that on GU, right? Now let's just click through on the other markets. So Euro dollar, we've got a bearish crossover. USD Swiss, again, look at how messy it is. You can see that with these moving averages, how much of a mess it is. Dollar yen. Now dollar yen, slightly different, right? Because you can see we had where was our bearish crossover? It was here. I wouldn't say we had a fresh crossover, but we've had a fresh wave of downside. We know about the divergence between the Bank of Japan and the Federal Reserve, the fact that we're seeing the Bank of Japan slowly increase interest rates, and we're seeing the Federal Reserve be priced in at max hawkishness, so the room is for them to come down. When we see that, that's where we could feed into some more downside for dollar yen. So actually a trade that I want to place today is this one. Let me just check the ADX indicator. So what we're going to be doing, guys, we're going to be launching an academy, and I'm going to be putting in the 2 strategies that I trade in this academy, right? That's the plan. This is one of them. Those of you who are on my streams, you know this is one of the strategies that I use. So this is the trade for me that I'm going to be looking at for today. So I'm going to screen grab that. And the reason I like it as well from a fundamental standpoint is it's back in that sort of divergence we've seen from the Bank of Japan and the Federal Reserve. And I'm actually leaning towards the fact that I know fundamentally we are bullish on the US dollar, but I do believe that the markets have probably slightly gotten ahead of themselves in terms of we're expecting like maximum of 2 interest rate cuts this year. Well, look for a softer inflation print this time around. We had a slightly softer NFP. This could be something that we trade this week. So this is my USD yen sell analysis from stream. From today's live stream. So if you're not in the Discord channel, links in the description. It's completely free. I'm also going to have a QR code on these streams that you can just scan and join straight away. But this is where I post all of my personal trades and also the community sharing their trade ideas as well. So make sure you come and join that. And that for me is the dollar trade for this week personally. And we've looked at commodities as well. Gold's already gone for me, so I'm not really interested in trading it too much. I know some people trade oil as well. Oil's a bit more of a tricky one. I actually think that if we look at oil prices, we've got an order block here. Sorry, we've got a demand zone here, shall I call it? I actually think that we could see something like this, a move up to about 75. But not massively confident in that, to be honest. It's sort of following the trend. We can see we had a little bit of a breakout here. Break of that high. Retest into a demand zone. Could we see, is this more of a daily sort of swing position trade for oil? Will we come down and maybe test 70? If you actually look at where the 50% of this demand zone is, it is at 70. So I'd love to see this. I'm actually going to set myself an alert here at 70, just above 70. So that's another trade that we can look at. So US oil is crossing 50% of demand zone. Okay. So they're the two main ideas. If anyone does have any questions, then feel free to reach out to me anytime in the Discord channel. I'll be more than happy to help. But just to summarise, UK GDP important. We've got US inflation is the most important. We've also obviously got the tariff story, which we need to keep an eye on. And for me, my favourite trade idea for this week is that humbling dollar yen, which I was trying to go long on, and I was wrong. Now I'm going to go short on it. See how we go. And oil down at 70. I like the 50% of that demand zone as something to watch out for. Okay, right. If you haven't already checked it out, and you are into prop trading, then we have a Discord channel for Atmos as well. Atmos by Taurex is our new broker-backed prop firm. Feel free to go and check that out, the atmos.tradetaurex.com. Have a look at everything they do. They're doing some fantastic giveaways as well on their social media, so make sure you check that out. And if you have any questions on that, again, you can reach out to me. Or we have the team of moderators at Atmos. They're in our Discord channel as well, so you can always message them at any time. You'll see they've got the little Atmos logo. And also they've got the Discord channel as well, which you can join and chat with prop traders on there. And yeah, feel free to go and check that out as much as you like, and you'll probably see my face on there as well. Okay. Right, that was it for your weekly preview. Good luck to all those who are trading this week. And again, if you do need me, feel free to reach out. Until then, I do hope everyone has a good trading week. And yeah, let's see how these markets go. Thank you very much. Take care. See you soon.